Hello and welcome to our rebranded stock analysis education videos brought to you by Penny Stock Analysis and PennyStockAnalysis.com. Today's analysis video will be about one of the most commonly used and most important tools in your technical analysis toolbox, and that is the moving average convergence divergence line, otherwise known and usually referred to as the MACD. The MACD is a wonderful indicator. However, the essence of it all boils down to these 3 points. Number one, the MACD is used to identify changes in momentum. You'll see how that works using zero lines and when the two moving averages cross over. It is a momentum indicator and often shows a change in the trend before the actual change in the price. So it's not quite future telling, but nonetheless it works in your favor, and usually once a trend is established with strength, it will continue that way for a given period of time until maybe a news release or technical traders or fundamental traders as well come to the conclusion that it may be undervalued at that point, and so buying will begin. So we move on. So now we move on to exactly what the MACD chart will look like. So one thing you'll notice when you look at many MACDs is that there's no predetermined number scale. So it's the direction of the lines or trends that is more important. You'll notice the tool also consists of 3 main things. There is the MACD line, a signal line, and a zero line. And oftentimes a histogram, which is basically a bar graph, is included in order to help you see the difference between the 2 lines, which can often be difficult depending on your viewpoint. And the other thing to watch out for is you have to look for the times when the MACD line crosses the signal line, which of course may be a heads up that the trend is changing. So we'll move on and show you in charts how that works. The first company that we will analyze today, so we can better demonstrate how to use the MACD charts, is Garmin. In other words, one of the most, if not the biggest, maker of GPS devices in North America and perhaps the world. So what we see here is we see the price chart on the top, volume chart in the middle, MACD is on the very bottom. So the yellow line, the squiggly line, is the MACD line, and the red line is the signal line. So the reason I've highlighted the 2 circles is to identify one thing. One working in an upwards price direction, one moving in a downwards price direction. So the first thing we're going to look at is in the yellow or orange dotted circles. So looking between September and October on the price chart, we see that Garmin is at the very bottom and then experiences a strong price movement up through until about the middle of October. Correspondingly, looking down at the MACD, you'll see that the MACD line, which is yellow, crosses the signal line, which is red. And so you also should see these blue little mountains on the chart. That's the histogram. That's the bar graph. And it should be much, much easier to see that bar graph. And that really gives you better spatial perception as to how far the divergence actually is. In other words, more momentum is building. So the line, the MACD line, continuously gets farther away from that red signal line. And that is much better exemplified in that orange circle by those little blue bars. So when the MACD line crosses the red signal line, it's very bullish and the price moves up. By the same token, if we look at the blue circle on the price chart, we see the price goes down from November to December. Looking at the MACD, that corresponding blue circle shows that the MACD line crosses downwards over the red signal line, and that means there's a momentum but in the downward pressure. And again, it's much easier to see that split, that divergence, looking at that blue histogram. And so that's the first thing I want to get you used to, is looking at these charts and using everything that's available to you and how they correspond with upward price and downward price.